Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everybody, check in on the MJ sector, looking at both Canadian and US names, and we got a marathon video here. We're going to look at OWCP, WEED, APH, ACB, EMC, MJN, RTI, CMED, CBIS, and GRNH. I want to start it with OWCP because this was a big time breakout today, and it was a very clear breakout. And if I were going to try and sway people that don't believe technical analysis, which I certainly wouldn't waste too much time on, you can lead a horse to water, but you can't make them drink it. But either way, this would be the example I would give them because this is logic. This is just straight logic on how you can utilize charts to know when to enter a trade. So here we have OWCP. It's coming off of a breakout. After breakouts and breakdowns, a very common pattern we see is what I call reaching an equilibrium, where we have higher lows and lower highs and a tightening range on decreasing volume. That's just the basic pattern that occurs time and time again on all different time frames. So we have our high at 95 cents. Our low of the initial pullback is 45 cents. Lower high, higher low, lower high, higher low, lower high. You can see as the range gets tighter and tighter, a break becomes more and more imminent. Think of it like a rubber band. You're pulling a rubber band tighter and tighter and tighter and tighter. It's eventually going to snap, and that snap is going to be marked by a spike in volume. Look what the volume did. We hit our high, then we hit our low, and ever since then, it's just been slowly dropping off, volume disappearing, and what stands out, obviously the volume today on a huge bull break. So how do you know what signal, what level that would indicate the bull initiation of the position? And I posted this morning as the range to be watching, the most recent low of 55 cents and the most recent lower high of 72 cents. So here we are after the close of yesterday at 67 cents. So we know that if we break 72 cents, we are going to break the lower high pattern, and it's going to instantly favor the bulls in that scenario. We could assume that the pattern is going to break bullish, and it's certainly more likely than not just because of where we are coming from. The bulls do have the trend and momentum in their favor, but the more cautious trader will wait for the clear break of resistance, and as soon as we broke 72 cents, that's your bull signal right then and there. Now, we knew that level going in. In the morning, I posted like the range to be watching, and once we broke 72 cents, we had members getting in. I know one member wrote it from 735 was as soon as he could get in, and he exited at 92 cents. So over 20% in one day. And how do we know? So why does this matter? Let's look at the 5-minute time frame. And on the 5-minute time frame, pulling it up here, we can see the day was dead. There was absolutely nothing going on today. Look at the first hour and a half, 2 hours of trading. No volume, no action, no nothing. It'll put you to sleep. So fortunately for whoever was watching this name, once the volume showed up, right here, this second candlestick is when we broke 72. Now look what happens after we break 72 cents. Look at this volume. Very, very clearly, you have dozens, if not hundreds of traders watching 72 cents, and that's their go signal. It could be algos as well, computerized program trading, but as soon as 72 cents breaks, that is the clear signal, and you have tons of traders jumping in, and they run it up to 90 cents in 2 hours. So 72 cents, an 18-cent gain in 2 hours, huge gains to the upside, over 20%. So even if technical analysis doesn't work and it makes no sense, that doesn't matter because people believe it works, and they're going to be using the same trend that we were watching. And as soon as 72 cent breaks, very clearly everybody is piling into this trade. And we saw a huge move to the upside, and that is how it played out. So they cannot be more clear with nobody caring about this stock until 72 cents breaks. So back to the daily chart. As soon as we broke 72 cents, the bulls take off, and to find resistance levels from there, you go back to each lower high. 737 was the next one. Look at a little one here of 79, and then up to 845, and then the highest price we saw was 95 cents. We could not break that level. We consolidated from 94 cents. So heading into Tuesday, we have a little bit of a double top at that all-time high. If we break 95 cents first thing Tuesday morning, $1 psychological resistance will be next. And again, it's that volume showing up that let us know that bull break was coming, because everybody and their mother was watching for the break of 72 cents and jumping in as soon as that occurred. So the weekly time frame, awesome continuation after consolidation. 3 weeks of consolidation, bulls are back, breaking out above the upper Bollinger Band and looking to break 95 cents on Tuesday. WEED, we had a huge bull breakout, and this was due to the name change as well as hype leading up into earnings. If you see a stock run 25% heading into earnings in 7 days, it's going to have to take a huge surprise in those earnings to see continuation from there. Everybody is getting into earnings in anticipation of the earnings. Who's waiting until after the earnings come out to buy? Nobody that I know, nobody in the forums. That is not what's going to happen. So earnings come out, we see a gap up open. It's a gap and trap profit taking. I posted that morning that if I were in this trade, I would be looking to take my profit and reload lower, because we had a 25% run up into the earnings. And the sell the news event is something that anybody in the marijuana sector should be very familiar with. And even if you're not familiar with it because you're new, look back historically, sell the news, sell the reaction to votes with states passing. It is a very common phenomenon, as everybody thinks they're smarter than the market getting in before these events happen. But if everybody's doing it, then no one's going to be left to buy after the events happen. So we pulled back to 1150 and saw a little bit of a bounce. And because of the lack of a bounce on that earnings day, we knew that 1150 was going to be tested again. And we knew if it held, it would be a bottom fishing play. And a bottom fishing play is when you utilize support to make a bullish entry and you exit if that support were to break. So if we drop down to 1150 and get a buy order in at 1153, we had members buying at 1153. And then if that level would have broken, a stop loss at, say, 1148 would stop you out, and it wouldn't be a whole lot of risk. But it worked out in the favor for the bulls. Lots of people getting in on that 1150 support, and we saw a really nice continuation. Big time gains at this point, over $1 to the upside, pretty much a 9% gain. And we are now looking at, I do anticipate an equilibrium pattern, just like we saw on OWCP. Because we had the breakout, there's our low. I do expect to form a lower high and a higher low, and to watch this range tighten exactly like OWCP did. There's our high and our low, lower high tightening range. Doesn't have to play out this long. That's a pretty drawn out tightening pattern. It could just play out for a week or two, but I do anticipate a lower high to be set. If I were in this trade, I probably would have taken my profit today. We closed strong enough that that was not necessary. We've got resistance at 1275, and if we break that level, we're looking at 13. So not necessary to take profit today, but I would absolutely expect a lower high to form compared to 1330, and for us to head back down and test $12 support again. Weekly time frame is a bearish doji. After 2 big bull weeks to the upside, this candlestick shows indecision, and indecision at the top of an uptrend does favor the bears for a little bit of a pullback. So that is why we are going to be looking for an equilibrium pattern, a lower high, and a move back down towards $12. Man, 7 minutes in and I'm 2 tickers deep. This is going to be a long one. Bear with me here. APH. So APH was in breakout mode, following along with WEED, which is the sector leader. And APH has now established itself as number 2 in the sector in terms of technical strength. And that's because of the breakout that we did see here. So on the daily time frame, we have an inside candlestick forming where we had a very tight range today. And you can see the volume is dropping off after this breakout. So we're going to be watching the range of today on Tuesday. A break of 647 will be bearish. We will lose the upper Bollinger Band support, and we'll be looking for normal, healthy consolidation following the breakout. In terms of resistance, if we see a bull break of 662, we're looking up at 672, and if we get a break of that level, 699 is the next level from resistance back in the end of November. So extremely strong week for the bulls. You see that on the weekly time frame. Bullish MACD cross, increase in bull volume 3 weeks in a row. Upper Bollinger Band resistance is 670. We need to keep an eye on that weekly Upper Bollinger Band. We did reject from it this week, and next week it's going to be at about the 680s. So it is still going to be in play next week, and the bulls are either going to have to break out above it, like we did back at the end of November, or we're going to have to trade sideways, consolidate a little bit while we wait for that weekly Upper Bollinger Band to ascend to the upside and create room to head back up towards the $7 range. ACB is acting as a bit of a laggard, but I do believe we're going to see it follow along. It is now seeing some upside. The bull volume showed up here at the end of the week, and we had clear resistance at 262. 261, 262, multiple tops at those levels, and the close above those levels at the end of the week does favor the bulls, as we are still recovering from the bearish reaction to the dilution that came in, the money being raised. So resistance from here is 267, 272, and 285. And the major level is 272 to break the recent high that we did see. So ACB, we'll see if it acts as a bit of a laggard. It was very clear to me that when we saw that profit-taking day on weed after the earnings came out, that money was then being put into other names. And we see it on EMC as well, which is coming up next. And we saw it on APH, leading to that breakout. So now perhaps after those names have broken out and we're seeing some consolidation, perhaps money's going to come into ACB and it's going to act as a laggard here. And it is a very beneficial play in the marijuana sector, at least in the US MJ for the past 6 years. When the leader breaks out, you look to the laggards to follow. So ACB on the weekly time frame, tightening range where we have higher lows. And if we get that break of 272 resistance, you can see there's a lack of resistance. We only had 3 weeks of trading above 272. So a break of that level would be a big time victory for the bulls. EMC. So we have been bouncing off of 350 support multiple times, and we have been scouting this level ever since we started to consolidate here after the all-time high back in mid-January. I have been posting and saying, be patient, wait for 350. And why 350 stood out to me was honestly just watching the first trading day of action. And that is because the price action, it acted as resistance, we got above it, and then it acted as support. And that all occurred on the first day of trading, and then we did lose that level, and then it acted as resistance again, and then it acted as support here again at the end of December, bouncing off at 352. Nothing's exact, I always give wiggle room by a couple pennies, but it was clear to me on the first day of trading that 350 was a key support level, and I actually did make my first bullish entry on the break of 350, day number 1, and then exited on day number 2 at break even, or actually it was a small loss on day number 2. But either way, it was 350 that was the key level that we were looking at. And so that's why it's come back into play here again. We pulled back. We bounced off 350. We had everybody waiting and placing their orders to buy in at 352, just above support. And seeing a nice bounce, we went from 350 up to 390. Nice gains to be had there. They didn't last very long. It lasted a couple days. Certainly enough time to, at the very worst, get stopped out at break even. Then we pulled back. We bounced off of 351 and then 350 again. So very clearly at this point, 350 is pretty much the most important level in EMC besides the all-time high. And we keep holding it, and now we have a stronger reaction. So we bounced off 350, got to 390, bounced off 350, got to 419. That's a double low of consolidation and a higher high. So now we have our higher high, and the bulls are trying to change this trend here. And we had the same play, people entering on that 350 support, put your stop loss just below 350. The risk that you're risking there on 1,000 shares, you're risking $50 at most by bottom fishing off of that support. So we had that resistance. We're rejecting from the upper Bollinger Band, and we knocked back from that level on Thursday and again on Friday. We're currently undergoing normal healthy consolidation after a big bull break on a 3-day move. I'm looking at support of 375 and an absolute must-hold level of 350. If 350 breaks on EMC, I would not be anywhere near it bullish. That's when you exit everything, you step back, and you wait patiently and watch how things develop. So resistance is 420, the high we've seen on this move. Then I'm looking at 430, and we're looking down at 350 and 375. MJN, another huge bull breakout. Look at the tight pattern. We got extremely tight after a breakout, and then we saw a clear spike in volume. Look at the volume. It just drops off, nowhere to be seen. You don't even have to see price action on these candlesticks. If you were watching just a chart of volume, it's very clear that the bulls are showing up and breaking out, and they saw big time follow through. Key support is the low of this consolidation before continuation, 232. The bulls want to hold a higher low compared to 232 on the next period of consolidation that we do see, but the bulls are still in full control. Look at that volume. It's exactly what the bulls want to see, increasing bull volume from Thursday to Friday. Strong close up near the high, $2.89 and $3 are the next resistance levels, and as long as we close above the upper Bollinger Band on the daily, the bulls are in full control. Keep in mind, we have seen a very significant gain here. We have seen over 50% in 8 trading days. So profit taking is not far away, and I would never be making a bullish entry up at these levels. I would only be looking to lock in profit, hopefully already being in. So that is what to be looking out for. I do believe that the reversal candlestick will form on a day where we see one last big push to the upside, and then we see a lot of profit taking quickly, leaving a big upper wick on the candlestick. So I do expect that to happen early next week. Keep an eye out for a complete turnaround in the trend in the middle of the day, if not early in the morning. Weekly time frame, full-on breakout. This is such a strong stock because it's building support on the way up. Nice higher lows and higher highs. Look at the bull volume on each breakout. Big time continuation. That is a beautiful chart for the bulls. RTI, look at this breakout. What occurred? A tightening range. What occurred? A drop off in volume and a big spike in volume. So as you can tell, this is getting repetitive because these patterns happen all the time, and they're very easy to recognize once you've been doing this for a couple of years. So we had our high on the breakout, our low of consolidation, lower high, higher low, lower high, higher low, straight across trading on no volume. You know a move is imminent. You know a break is imminent. You're just waiting very patiently. Key resistance I'd be watching. We had tops at 62, 61, 61, 61, 61. So if we break 62 cents, we know we're breaking all kinds of resistance levels. 62 cents on February 10th, we saw a spike in volume. That right there on February 10th was our heads up. That says, okay, volume's picking up for the bulls. We had a test of resistance. We couldn't break it, but we know if we get above 62 cents, that's the kind of play where you have your order filled out. You have your buy limit order at 64 cents, and as soon as 62 breaks, you hit enter, and you're ready to go in that trade. The same thing for OWCP today. You have your buy order with a limit of 74 cents. As soon as 72 cents breaks, you hit enter, and you're in the trade. And that is as quickly as you can get in while waiting for resistance to break and trying to get in before everybody else who's waiting on that same break, because we're all watching the same levels, and a lot of traders are utilizing technical analysis. And for those of you that don't like technical analysis, I'm sure 16 minutes into the video, you're long gone by now. But if you're still here, over the next 10 years, there is going to be nothing but more and more people using this. We are on a very clear trend of who is using technical analysis and the growth that it is seeing, and it's not going anywhere. It's only going to get bigger and bigger as more and more platforms and brokers use it, and it becomes more popular. So here's the break of 62 cents on huge bull volume. We consolidated on decreasing bear volume. That's what the bulls want to see. So here's our breakout. Now we're going to look for the same thing. We're going to look for another equilibrium pattern. Breakout, long-term equilibrium, breakout. Our low is 62 cents. Look at that perfect back test. Previous resistance, now acting as support to the penny. Bulls bounced right off 62 cents and continued to the upside. So here's our high, our low. I do anticipate a lower high to form compared to 79 cents, and then to pull back and form a higher low compared to 62 cents. And we're going to do this all over again. It might not be as drawn out, but we're going to see volume drop off. We're going to see the range tighten, and we're going to see an equilibrium being reached after the breakout. Weekly time frame, upper Bollinger Band is rejecting the price at 75 cents. Nice big time bull volume. Higher lows and higher highs continuing, but that upper Bollinger Band is a factor to be watching each week as the bulls were unable to get above that level. CMED, we're going to be watching CMED really closely because of the consolidation we've been seeing. What stands out? Volume dropping off, completely disappearing. What stands out? Volume today showing up for the bulls. CMED is on watch next week. We had a big time bull breakout. We've been consolidating in a contained, healthy manner. No dumps, no spikes in bear volume. This is exactly what the bulls want to see. Look what happened after the last breakout. Healthy consolidation, normal bull breakout. So this is signal number one. It's a bullish reversal candlestick holding the middle Bollinger Band and a spike in volume. I like the setup here a lot. We've got 1202 resistance. After that, I'm looking at 1210 and then up to 1229. If the bulls see more than 160,000 shares traded on Tuesday, we're going to see big time continuation, and we're going to be heading up into the mid $12 range. 1229 is the first major resistance I'd be watching. So I do like the setup here. The weekly time frame, bulls seeing a little bit of a lower wick. Now we need follow through. This is a bull flag pattern. We had the breakout with a huge week, 3 weeks of consolidation, and again, the key word is contained, healthy consolidation. So a bull flag, looking for continuation, CMED shaping up for the next 2 weeks. Well, let's take it 1 week at a time. Next week, I do anticipate CMED to see some nice bullish follow through. CBIS, very key support, must hold here. We were reaching an equilibrium, higher lows, lower highs, tightening range. We had a wild day here on big volume, and we hit a low of 10.6. Now we hit a low this week of 10.6. It's a double low. We did lose the middle Bollinger Band support. That's red flag number 1 because it has held multiple tests before now. So now it's resistance. Back tested and rejected from it today. If we break 10.6, that's a breakdown of this daily time frame, and we're going to see the bears take over. Now, how significantly they're going to take over remains to be seen. $10 psychological support will be after 10.6, and then I'm looking down at 7.5. So that's a very big drop before we find some key support. So the double low of 10.6, if that breaks, that's a clear bear signal. Weekly time frame, getting a little toppy, indecision the past couple of weeks. Still holding on just fine on the weekly time frame, but if we do break 10.6, that picture will change here, and the bears will take over. And last, we got GRNH. GRNH is battling to hold 85 cents. Look at these lows. 85, 85, 85, 85, 85. I'm saying 85, but it's 0.085. 0.086, 0.85, you get the idea. It's hitting this level a ton of times in 2017. It's a must-hold support level. It's a descending triangle pattern where we have a horizontal base of support and a lower high pattern as the range gets tighter and tighter. Bulls bought the dip a bit today. We have to see follow-through. We have to see $10 or 10 cents become support again. It rejected here all last week. If it cannot become support and we break 85 cents, same thing as CBIS, we're going to see another leg to the downside. The weekly time frame, it's all about the middle Bollinger Band support and the 200-week resistance. We've got a half dozen rejections from the 200-week resistance. We've got the middle Bollinger Band support holding the last couple of weeks. That range is getting tighter and tighter. If we lose that middle Bollinger Band support, break 85 cents, we're going to see a big pullback, and we'll be looking down at the next support of 767. And we'll also see a bearish MACD cross to go with it. So a couple U.S. names seeing some weakness, all kinds of Canadian strength. OWCP is Israeli, I believe. They're seeing strength. So we got plenty of setups to be watching. We've got CMED is the most potential because we've seen breakouts in most of these names already. So ACB and CMED have the most potential in terms of being laggards, looking for consolidation. In RTI, I do not believe, actually I take that back, MJN. I do not believe MJN has much more in the tank to the upside. Look for a catalyst day. Look for a big-time move to the upside and a big turnaround with a long upper wick. And check me on all of this. Keep tabs. We'll check back in. I'm sick of talking. Have a great long weekend.